While the markets have recently been crashing off of a cliff, we actually got some really good news here this morning. The producer price index, which shows wholesale inflation numbers, actually came in really good this morning. We were expecting a 3.3% year-over-year inflation rate, and instead we got just a 2.7%. That's much better than expected. And that's following yesterday's consumer price index report, which came in showing inflation cooled to 2.4% year-over-year rather than the expected 2.6%. These are good inflation figures. But because the market has been so caught up in this high volatile market environment that we are in due to all of the tariffs and trade war stuff, the market is still very wobbly here. And while it's up slightly at the time of recording this, the CPI and PPI were not enough, it seems, to really get this market excited, as again, focus is still very heavily on the tariffs. From a price action standpoint, when taking a look at the S&P 500, we have actually seen some lower highs coming into this market, and we just recently tapped back into a level of resistance. Personally, I'm looking for a breakout here before I get any bullish signals. Although we had good inflation data, I really think we need some sort of trade negotiation progress with China before we get overly bullish. Price action on the indices still looks bearish to me. I'm just waiting, like I said, for some signs of reversal, and that will probably come with further positive news catalysts in the form specifically of the China and US trade relations. Taking a look at gold's price action, you can see we are up and away here recently. With this cooling inflation data, gold definitely loves that, but also we've seen some selling in the dollar anyways due to the concerns around US trade. It seems like people and investors around the world are focusing in on other risk-off safe havens, and gold is definitely a beneficiary in all of that. I've personally decided to move my stop loss. You guys know I'm in a trade on gold, and I've moved my stop loss here below this structure low. I am looking for, if we do get a pullback, perfectly fine, but I'd like to see areas of support hold around the 31.50. Otherwise, I will take profits on this move. Price action looks very bullish here, and I continue to like the story and like it even more after this week's very cool inflation data. And one of the most bullish reasons that I think gold can continue is that institutional money thinks that it can. Clearly, institutional money has been very long here recently and has made a wonderful call to stay long gold in all of this turmoil in the last several months. But it actually goes back further than that. When we select COT data history and select for gold, you can see that gold has been a very bullish asset for institutional money for actually a couple years now, and they've been riding this monster trend higher. So I find it very important to track institutional money as well as economic data to spot the biggest potential trends that are forming in markets and to go with the flow of the river rather than against it. And currently we're doing our biggest sale event of the year on the Edgefinder. It's the 3rd anniversary since we launched this product to the public, and I do want to make sure that if you have not heard already, to not miss this opportunity. It is the lowest price that we go all year long on the tool, the biggest discount. We do 40% off for a very limited time. And if you listen to my advertisement here and you stuck through it, click the first link in the description down below, chat directly to our support team, ask them about the additional discount for subscribers, and you'll see that they can get you up to 45% off the tool. And it is a one-time payment for lifetime access, and you get access to all the new features that we build for the tool. It's a pretty cool deal, and I definitely encourage you to take advantage of it while it lasts. Of course, cooling inflation data means that the Fed may have more ammunition or the ability to cut interest rates easier this year, which could help in multiple ways. First and foremost, cutting interest rates would help the consumer who may want to go buy a house eventually, and it may also help to dissuade the US economy from going into recession with all of the consumer sentiment already kind of spooked by what's happening recently with the trade war stuff, and whatever happens next with the China, US, Europe, all the trade negotiations, having the Fed able to help out if needed because inflation's under a little bit more control is a very positive thing for markets. Not so positive, however, for the dollar index, which is in a very bearish downward trend here and actually breaking for the first time in months the 100 level for the first time. So you can see a huge downward move, and this to me still signals more bearishness ahead. I actually closed out of 2 of my my currency trades here this week, the euro dollar longs and the Kiwi dollar longs. And both the Kiwi dollar and euro dollar were Edgefinder ideas that I married up nicely with the technicals. Specifically, I used the Top Setup's economic data only score, which takes a look at growth metrics like GDP and retail sales, inflation like CPI and PPI, and then labor statistics to give us an overall reading for these major currency pairs. And then I found technical entries that I liked a lot for the setup. You can see most of these things are pointing more towards dollar bearishness in the short term. And so I definitely liked those trade setups, and I'll show you them now. This morning, I closed out my NZD USD long position for about 220 pips. And yesterday I closed euro dollar for almost 400 pips in profit. And you can see the euro dollar is in just this just ginormous move higher here recently. And I did decide to close some profits at what seemed to be a pretty key level of resistance, but clearly you can see just how strong this market is. We hit that resistance point. I closed out for a profit, and now I'm actually looking for further long ideas, but preferably would wait for some sort of a pullback, especially if we get kind of a retracement down back into the 1.10s, 1.12s. I like that for a continuation, but the euro continues to look strong, and I like the trade quite a bit. I also had a very simple trade on the Kiwi dollar. I pretty much went long at support here and then took profits here at resistance. Basically, I really liked the fundamental setup overall. Technicals hit a key level of support, and I just traded this thing range to range. For the Kiwi dollar, if it does come back down, I may look to play this again, or if we get some sort of substantial breakout and pullback, I like that idea as well for further long positions. You'll also notice that dollar yen is very bearish on our economic data score, basically saying that Japan overall is looking pretty strong in relation to the US dollar. And we can see that on the technical price action of this chart. You can see we have a very clear downward trend, and we actually even retested resistance and beautifully sold off lower. So if we do double back and retest this area, I do think that there is likely a chance that the Japanese yen will continue to look strong, especially if we continue to have uncertainty in this overall global financial kind of trade war that we're seeing break out. That uncertainty makes the Japanese yen look relatively attractive to many other currencies, especially the dollar, which is under scrutiny with all what's going on. So let's talk briefly a little bit about the NASDAQ here, which you guys know I want to be long the NASDAQ, but I have been waiting, and gladly so, patiently for a sign of a breakout here to the upside. With CPI and PPI coming in soft this week, that's a really good positive economic data point that I think gives the Fed more ammunition. But let's talk about price action and what I'm actually looking for before I can set up some kind of bullish trade. Specifically, we have this key level of resistance, that big exciting up day that ultimately got faded into pretty aggressively. I want to look for an opportunity to get long, but I want to wait until we actually can recapture that area, show it wasn't just a fluke of a day, and look for some higher lows in this market. So that's personally what I'm looking for. Likely that would be a trade setup for me if we can get a burst higher. And the tricky part about all this with the indices is that we're one news headline away from seeing this thing absolutely crater or absolutely rip higher. And that's what makes this environment very tricky to trade and very high risk. And that's why I wanted to tell you about today's video sponsor, Vantage. Vantage allows traders outside of the United States to trade with CFDs, which can be used to help control your risk a little bit better based on your sizing, right? You can do all sorts of different things with CFDs. They're pretty cool products. Unfortunately, they're not available to US traders, but for people outside the United States that are looking for a CFD brokerage, Vantage also offers a substantial welcome bonus to my subscribers. So if you want some information about the welcome bonus and about their CFD products, check out Vantage using the link in the description down below. Thank you again to Vantage for sponsoring this video. Now back to the content. And in today's Market Insights podcast, Johnny and I spoke a little bit about everything that happened this week, inflation, all of the tariff news, and much, much more. Check out a clip from today's podcast episode.
I wanted to talk to you about the latest PPI numbers, which came out a little bit earlier, Nick. Of course, yesterday we had the latest CPI numbers, which were lower than expected, and PPI has kept that trend.
Yeah, and Johnny, I mean, the market almost seemingly just overlooked these two data points, even though give us, 6 months back on the podcast, and it was all the rave to talk about how inflation was falling or if it was rising. And, both of these numbers, actually, to your point, they came in better than expected. These were good figures. Now, there was a big drop off in the price of oil that largely helps with the inflation story. But I don't think we can totally dismiss this good news. news, I think this is good news, right? This gives the Fed a little bit more leniency on what they could potentially do if needed, right? It basically brings forward or brings up in price, I suppose, the Fed put in some ways to everything that's going on. You know, there's a lot of uncertainty around the tariffs, but if we do get slightly more certainty in the sense that the Fed feels that inflation is starting to dial down, that gives them, you know, their biggest card they can possibly play, which is rate cuts. So rate cut probabilities have, you know, slowly risen here well, actually not so slowly, but risen in recent times compared to, you know, we started this year looking at maybe 2 rate cuts. Then now all of a sudden we've got multiple more than that. So I think it's, you know, it is good news. We have good inflation data that came out, helps to play into the story, but it mostly gets muted in terms of its significance to short-term market moves, simply because all of the swings back and forth between headlines, which to your point about, you know, the chaos of this week, Johnny, I don't know of a time since COVID. COVID's the only time I can recall where market headlines were moving faster than this, right? It was about a very similar feel. It was just a constant news cycle hitting us every single morning, evening, night, while you were sleeping. It was like always just something new happening.
I agree. I mean, I also agree that yes, these numbers do give the Fed more breathing space, but I was chatting to you off air. Does any of this really matter? You've just said we are dominated by the tariff headlines without knowing what lies ahead. PPI, CPI, is it even relevant?
Yeah, and to your credit there too, you know, the other thing, Johnny, is like a lot of the unemployment statistics investors are largely seemingly putting to the side and ignoring, because they are, of course, looking backwards. And then every day we're getting these big game-changing announcements or changes that could, you know, substantially hurt or not hurt the economy in future times. So it's a difficult time because you're getting this economic data that's looking backwards, and then we're getting such game-changing stuff every single day now. So in some ways, it makes sense that the market's kind of approach is going to be to focus on those ever-changing current major moves that are occurring with administration and fiscal policy and all that. But I do still think that they do matter. I think that like I said, it gives the Fed a card to play if they need it. If we can see them feel a little bit more appropriate about where inflation is. If we have inflation that's just like, if we had seen a high inflation report this week, ahead of what many people are speculating could be more inflationary, aka the tariffs, right? We know very likely there will be bumps in inflation. The debate in economics world has been whether or not they will be persistent inflationary problems. That's up for debate, but we know there's likely going to be some price increases due to the tariffs. So if we had seen this week a look back that was already showing inflation problems, that could have been disastrous today. So I think we kind of may have actually silently dodged a problem there. And if we're starting at a better point for the Fed to work with, Johnny, back in 2018, we were looking at like just below 2% inflation, dealing with the tariffs and the trade war that was going on between the U.S. and China. What many critics have said is like, if we are at the 3s or 3.4s or whatever, if we were going into an inflation problem with already high inflation, that would be very problematic. But this today, again, not out of the woods by any means, but better than a 3% inflation handle going into all of this.
I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.